Welcome, I'm Mark Todd from the NAB, and on behalf of nabtrade, I'll be talking to Nick Chaplin, Head of Listed Originations at the NAB. Today is an education piece on subordinated debt, we call it subdebt, and I'll talk to Nick about some of the risks and some of the benefits and what you as investors should look out for in subdebt. And I think most of the people who would be watching this video would be familiar with the hybrid securities, so we'll look to compare the differences in hybrid securities with the debt market, and subdebt is debt market. Hi Nick, how are you?
Always good to be with you, Mark.
Thanks for taking the time on such a busy day.
Pleasure.
Let's talk first about what subdebt is. How would you explain to the viewers who are watching this what a subdebt is?
It's effectively a bond. The subordinated debt that you talk about is the ranking of the bond, so it just ranks below other bonds that are typically issued, but it also, there are other instruments that rank below it, such as equity.
What are the differences in subdebt? So what do I look for as a characteristic that we can see in that difference? So you talk about the ranking, equities, riskier, help the viewers understand how that plays out, why people think of that in that order.
Well, one of the more commercial aspects of the differences between a subordinated debt issue and a hybrid issue, or particularly if it's issued by a company that pays tax in Australia, is that subordinated debt is generally paying all cash coupon as opposed to a hybrid which may have franking credits.
So viewers who like franking will see that's hybrid, they like the franking, but in subdebt it's straight coupon, that's a debt instrument. That's the difference between one is a combination, hybrids is equity and debt, whereas the subdebt is just a debt instrument.
It's pure debt. So the other aspect from a legal perspective is the coupons or the payments in a subordinated debt instrument must be paid, whereas in a hybrid sometimes they're discretionary.
If you think about the benefit to the investors, how would you suggest the benefits would be ranked? In other words, what would you see as the benefits? It's this fact that they accumulate, the coupons accumulate in the subdebt. What else would you look at?
Well, I think you need to look at the tenor as well. Quite often in hybrid instruments, again issued by banks, and indeed sometimes issued by corporates, they can be perpetual instruments, so they can actually run with no fixed term. On subordinated debt, there is always a fixed term. That's a key characteristic of subordinated debt. As you've mentioned, it's all debt, so it's all cash payment. It ranks higher in what we call the capital stack than hybrids do. So consequently the yield's lower because the risk is lower.
And when we hear of a subordinated debt, it's called a 10-year non-call 5. Can you help everyone understand what that actually means?
What that means? If it is 10-year non-call 5, it simply means that it's got a 10-year maturity and it cannot be called in the first 5 years.
And what would you say are the risks people should look out for when they want to look at subdebt as an asset?
Well, I think the risks of these instruments generally, subordinated debt is because of its ranking. If it's issued by a bank, it's capital, it's regulatory capital for that bank. So if that bank starts to get into some trouble, or if it in a wind-up situation, the subordinated debt would be used to absorb losses.
So we're thinking about a major bank in some trouble and then being forced by the regulator to take drastic steps to repair its balance sheet and repair its working capital. Have you seen a situation like that in Australia in recent times?
Never seen a situation in Australia like that. I think the best example of something more recent was Bank of Queensland when they made a loss some 5 years ago. They simply went into the market and raised equity, and that was the end of the problem.
What should investors look for when they're investing in subdebt? What else should they look for?
There's a number of things. Obviously personal factors we cannot dictate, so you've got to certainly ask your advisor about what level of risk is right for you. So the risks of an instrument are very key. I think the diversity of a portfolio and where this instrument may fit in your allocation, if you're after that diversity, is very key. And the credit of the issuer is vital. Obviously, if you're investing in a large company as opposed to a small company, that's a key decision.
Nick, thanks for taking the time to talk to us about subdebt. I think it's always very interesting to hear some of the risks and some of the opportunities. And I think the viewers, if you were looking at this, you should take advice if you are unsure of any of these securities. We hope you've enjoyed that video. I'm Mark Todd from the NAB, and on behalf of NAB, thank you, Nick. Thank you.